Good morning, everyone. Welcome to this live intraday strategy webinar on SB Trade Desk. Today is Thursday, September 29th. About to get the release of the third and final revision second quarter GDP, ladies and gentlemen, coming in stronger than expected, 1.4%. We talked about this yesterday versus the expected print of 1.3. Personal consumption did downtick to 4.3%. You got core PCE, which is going to be one of the main reads for the Fed's inflationary gauge, coming in at 1.8% as expected. So if anything, you're going to see a slight uptick here just on the basis of an upgrade or an upward revision to the second quarter GDP to 1.4%. Obviously, that 1.3% in and of itself was a decent read, upward revised from 1.1. So certainly the final revision taking us into 1.4%. So that's going to be the final revision for second quarter, okay? As we close out Q3 tomorrow, those numbers should be trickling in early next month. But certainly will be interesting to see how this plays out into Fed policy, or if it does at all, moving forward. So that's the major event risk on tap today, guys. You do get pending home sales later in the session at 10 p.m., so do keep that in mind. Also, I do want to keep your attention on the upcoming Fed speakers. Okay, so we do still have some Fed speakers on tap. Here later today, you have Lockhart speaking, who's about to start speaking in just a little bit. Kashkari will be the next major speaker, basically into the close of U.S. trade today. So do keep these comments or this commentary calendar in mind heading into the end of the week. All right. Well, it's good to see everyone here in the room. Adam, good morning to you as well. Eileen says good morning. Hope your Thursday is going well so far. Can't complain. Conwall, hello, sir. Thank you for your crude analysis. I cut my short position yesterday after you warned of the upside bias. Silver analysis helped me due to the range that you gave me. Thank you. Hey, you're more than welcome, Conwall. Doing a great job, by the way, on those oil and commodity trades. So keep up the good work. Sushil, Graham, good morning. See everyone here in the room. So let's jump right into it. So I'm currently flat, except for Kiwi Dollar. I'm still holding a bit of the Kiwi Dollar short that I noted yesterday on the report. We did book most of it at 26 pips, but I had to stop at break even right now. We'll see if we can't get that next leg lower, so we'll go over Kiwi. Obviously, we'll start off with the dollar CAD, sterling yen coming into target, dollar yen coming into target, and dollar CAD, I'm not really turned on by it. I know I presented that chart yesterday. I wanted to bring your attention to it. I still would look for a little bit more of a rally to the upside to get back on the short, but we will go over that as well. As always, guys, throughout the course of the session, if you have any questions or trade setups you specifically want to review, do feel free to throw those on the message board. All right, so let's jump right in. Here's what the Dow Jones Fxcm dollar index looks like, and here's what the relative performance of the greenback looks like heading into the U.S. session. You can see that the loonie is still the strongest performer. Oh, I'm lying. Hold on one sec. The yen is the biggest loser. That was from yesterday. The yen's the biggest loser on the session so far, down 0.93%, and this has helped us both on the dollar yen long position, which is closed at this point, and also the pound yen position, which is at resistance. So finally, some of that yen weakness starting to pervade itself in the market as we've been waiting for. We've been waiting for this all week, so finally got a nice play there. Aussie dollar down 0.44%. That went right into trendline resistance before turning around. So remember earlier in the week, I did get stopped out of that Aussie short at a 14 pip loss. There was another opportunity last night, missed it, but I didn't want to double up on a Kiwi short and an Aussie short. So we'll take a look at that. Kiwi obviously down 0.9% or 0.29%. And the loonie, pretty lackluster. Right now, it's only down 0.13%. But again, would like to see the loonie see some more strength, i.e. dollar CAD weakness, heading deeper into the session. All right. So let's jump right in. Here's what the Dow Jones Fxcm dollar index looks like heading into the U.S. Open. This is the 1 hour chart. Look, there's not really much going on. And if you guys have been frustrated with the near-term ranges that have been sort of sticking like glue, you're not the only one, okay? It's been a little frustrating on all parts, especially if you're looking for new, fresh intraday positioning. You really just got to kind of cherry pick and choose your entries meticulously in this environment. I do want to give you guys a heads up. There will be no update later tonight. I'm not going to be trading on into Friday. these Friday closes, guys, and I stress this to you is every quarter. These Friday closes, when they come at the end of the quarter and on the end of the month, it can charge some really radical price action, positioning, repositioning, and portfolio readjustment, and all this. In my, in my experience, has just been a very difficult environment to trade intraday. So I'm not going to point out or highlight any new setups tonight. I'm going to kind of sit on my hands with the positions that I have and see what we can get into the U.S. Open today, and we'll kind of close the books as we head into the start of October trade. Okay, dollar index near term, I do want to just highlight the basic weekly opening range that has taken shape here. You set a high early in the week. There's your weekly low, which has been defended 3 times at this point. And here we are back at the weekly open, unchanged so far, literally for the week. That's what these gray dots are. So, not much to do here with the dollar index. Levels remain unchanged, okay? Your key resistance is still this 200-day moving average into the monthly open, i.e. channel or basic trendline resistance. Bearish invalidation, still 12,018. Near-term support still at that 618. 11,915. I should probably just drop this in here for you. And key support would be down here at 11,850. So still looking to sell rallies while below, while within this formation essentially, with a downside bias in play sub 12,018. Any questions on the dollar index before we start to move in? Eileen says, solidarity there, no trading tomorrow. I mean, yeah, I'm not going to just put out levels for the sake of putting out levels, guys. If I really don't think it's a good environment, I'm going to tell you. I've just been stung too many times on these monthly, quarterly ends that from an intraday standpoint, specifically because we typically use much more leverage, it's just not, the best environment. Okay, let's jump right into it. Here's dollar CAD from yesterday. Pretty frustrating. Didn't get anything in overnight trade. Still interested in a short position if we can get up into this region. Okay, pretty critical. So I'm going to keep side-by-side charts here on dollar CAD just to show you. But inevitably, you have 3140, which is that swing high that you made back here in July. It's also the late swing high that you made here in August. Interim support here 2 weeks ago. And that would be a nice level of resistance that if you look at this near-term structure we added, converges on the 50 line for this operative structure. Okay. Also, that level represents a nice near-term pivot here in price. You can see that a little bit clearer here on the 30-minute chart. So a rally into this region, I think, would be a nice opportunity to try to get short. Also, keep in mind, this is the objective weekly opening range low. That break puts us bearish yesterday. And you have the weekly high, or the weekly open, just higher at 31.55. So real nice soft spot right here, 31.40 into 55 or so. If we do get a pop higher into U.S. trade, I'd be looking for possible short exposure. The bearish invalidation level for the trade is up here. Okay, basically 132.20 or so. If you break through here, I'm going to go ahead and invalidate that short side bias altogether in the near term. Obviously, if we do get the entry, or if we do break the subsequent low that we made last night, your subsequent targets haven't changed, 130.30. You have a soft target here at 129.87. I don't want to really stress it. It's just been a decent pivot in price, but mostly you're looking for that 38.2 down into 29.67 or so. So levels look pretty good here on dollar CAD. Again, volatility has been sort of really, it's like pulling teeth trying to get this thing to move, but levels stay unchanged here from yesterday. Keep in mind the near-term resistance that we just failed at to break above was the initial resistance that we noted last night, 31 handle. That's the monthly open in purple dots. For anyone who's new to the room here, I do see a couple of fresh faces. On all my charts, you'll see on the scalp charts that, or the shorter-term duration charts, the hourlies, you'll see that the purple dotted lines represent the monthly opens, and the gray dotted lines represent the weekly open. Same thing on the daily chart. You'll see the purple lines, again, or the purple dots highlighting the monthly open. So you can see that offered some resistance near term here. If we do break higher, wouldn't be looking to play the long, but I'd be looking for that long to offer some short exposure a little bit higher up. Kelly says, sweet long weekend. Well, we'll still be tracking the markets. I just don't want to be encouraging anyone to put on any fresh new positions. And with the same respect, Kelly, let me take a step back, guys. I don't want to shake you out of anything. The market always offers opportunities, specifically on near-term basis. But, you know, be super nimble and tread lightly. That's all I can say. Again, just personally, I haven't had all those best experiences on those monthly closes. Eileen says, I've been trying to prove you wrong on Fridays for a long time and it doesn't work out. You rule. It's not, again, Eileen, it's just what the market's doing. I'm just pointing it out to you guys. I'm trying to help you guys avoid some of the mistakes I've made over the years. So some food for thought there. All right, any questions on dollar CAD before we move off? I do think we do get some data out of Canada tomorrow. Yes, we do. GDP numbers for the month of July do come in. Keep in mind, these are monthly numbers for GDP. They're not quarterly, so we don't get quite the amount of volatility that we do for GDP's releases here in the U.S., but certainly it'll be something to keep in mind as we continue to track this dollar CAD setup. So month on month, not really the headline read, although it's rated more important by Bloomberg. It's never really understand why they do that. The year on year is the headline figure, okay, and that's expected to downtick to 1.1% from 1.0%. So keep that on tap as we head into the open of trade tomorrow morning in the U.S. As CAD follows oil, are you tracking oil higher for the dollar CAD, for the CAD to drop more? So Kelly, let's take a look at oil. Dollar index was number 1. Dollar CAD was number 2. Let's do oil number 3. Here's what crude looks like. So yes, okay, to answer your question quite bluntly, and I know Conwall was saying something earlier about the discussion that we had yesterday about, listen, if this thing breaks near-term resistance at 45.40, we're likely to see some further upside, and that's exactly what you got. 46.40 into 46.58 here, that level of resistance we talked about yesterday and highlighted, broke and is now near-term support. Note also this trend line, which is this trend line, okay, also converges on the 100-day moving average, which is also right in this zone. So right now, 46.40 is going to be your key support, basically the 46 handle, let's call it, for crude. I'm not bullish from here necessarily, Kelly, on one major account, and that's the daily chart, the levels that we've been following all month long. You have the high day close from last month, which is now near-term resistance, and you have a basic 786 retracement, which coincides with the exact opening range high for the month. Okay, so look, it's a breakout of sorts, but that breakout is already at resistance. So Kelly, I'm going to take a little bit more of a neutral stance from here. Same thing with you, Conwall. On crude, I do think you could get a little bit of a pullback here and a final stretch higher to probe this key slope. And remember how fruitful this slope has been for nearly 2 years now. Okay, here's the 2015 February high. And you can see the pivots that we've made along these median lines. And that leaves the risk, even if we break higher, I wouldn't necessarily want to get constructive, right? I'd want to see what happens here. It's really the break of last month's high, 78.60, the 786 retracement at 48.90, basically the 49 handle, that would be the breakout zone. And that would certainly shift the focus dramatically higher. So Kelly, to answer your question, a little bit of a wishy-washy, but again, you're heading into the end of the month, you're at the monthly highs, momentum is at resistance, you know what I mean? I don't want to stay constructive from here. Now that doesn't mean dollar CAD can't move lower, okay? And do keep in mind, like I said, we have those CAD GDP prints tomorrow, so don't necessarily want to impact our broader bias, but near term, while crude can possibly probe higher, I wouldn't necessarily be looking to get any scalps on the long side here. If anything, I'd be looking for a probe higher to possibly fade for crude. Okay, keep in mind we highlighted these charts on the radar charts earlier in the week, so the levels are for you unchanged. Okay, here's what crude looked like earlier in the week. So we basically double backed, we came back and sat in this range for a couple more days, then plowed through this major key resistance. So that invalidated our near-term bearish bias, now at resistance. Okay, On the near term, Kelly says, I get it. And Sunday is my Sunday fun day, and things I think you mean, may be setting up for next week. Completely agree. So, guys, remember the start of the week is always a fun time. The opening ranges just get set, and we still want to be a little bit nimble starting the week and the quarter and the month. But you got non-farm payrolls on Friday, so you're likely to see some dollar movement. November is a FOMC decision month, so you're going to get the FOMC decision as well. Unlikely that we'll see them move on rates, but again, a fresh new batch of U.S. data heading into December, which is going to be really the higher likelihood. If I'm not mistaken, Fed fund futures are still factoring in somewhere in the range of 57. Yeah, there it is. Still 57% chance that we'll see a rate hike in December. Okay, November continuing to dwindle lower. Okay, at just 17.1%. Conwall, any questions or Kelly on crude here? Let's take a second and rework these levels. They've been fruitful so far, but now that the structure has been invalidated and checked as support and moved higher, let's go ahead and work these levels for you and see if we can't get some more clarity. Clean this up a little bit. Okay, I'm going to go ahead and move this 88.6. I think it's not going to be as fruitful as as this 100, which will be a little bit more impactful for me. So this would be two equal legs off the low. That would take you to 47.96. Now, if you go back to the daily chart, 47.96 would be right around here. Look at that. Okay, and that's the exact slope for the broader formation that we're in, which caught the highs last month. So it could be another push higher before a probe lower, but near term, you know, I'd be cautious about this thing possibly trying to probe one last high before turning over. At the end of the day, if it closes above 47.69, above that 100% extension, 47.96, that would validate an objective monthly opening range break, and that would certainly put the shift to the upside. So again, like I said, stay a little bit more neutral here heading into the close of the month. I think you get some more definitive price action over the next couple of days as we meander near the highs here. Conwell says, no, thank you. You're more than welcome. Kelly says, all good. Right on. So that is crude and dollar CAD. Some radical price action lately, but levels continuing to hold pretty good here. There you go. Possible stretch higher here in crude. Okay. Next up on tap is pound yen. Let's take a quick look at pound yen. Here's what we were looking at last night. Also another trade that has continued to be pretty fruitful here. On the pound yen long side, we've been looking for this since earlier in the week. If you remember on the 27th, we had highlighted the fact that pound yen was basically setting up a really clean weekly opening range right above the low day close for the year at 29.97. So we were basically looking for an upside bias. We needed that break above 31.23 to validate the breakout in sterling yen. Here's what it looked like last night. You got the break. Okay, first target 131.80 got taken out. I did add a new target yesterday up here at 32.28, which is just the weekly swing high from Friday, but also the median line, the 50 line for the current operative formation there converges on it. Also if this formation is in play, this is a newly formed or newly identified pitch. You don't really know if it's in play, although we got nice reaction at the highs, nice reaction at the lows. That also gives us the 50 line also in that region. So 32.28 to 32.40 was a big region for me. Here's a pound yen looks like right now. Okay, so we're basically there right now. Okay, and here's where we were yesterday. So the rally extended through 131.80, and there's that major key resistance. We just tapped it, came back into near-term support, and now this is the range to focus on heading into the U.S. trade session. The trade remains constructive now while above. We're going to go ahead and move our bullish invalidation level to this region here still. It's going to be 31.23, which is basically the initial weekly opening range high. That was the origin of the breakout. Also now converges on this parallel and the 50 line off the low. So as long as we stay into this region, I drop it down even further, maybe into 31, into 31.20, this region. You want to stay constructive here on pound yen. Okay, the momentum signature looks pretty constructive. You had some really nice divergence into the lows that we highlighted earlier in the week as well. Price action making a lower low, the oscillator making a series of higher lows. And generally speaking, while you could get a near-term setback here, it's the yen, and we're going into the close of the month. If that breaks, you could get a near-term setback. We'd be looking to buy that pullback as long as we hold above that 31 handle. So Steven says, sterling yen, when you get to it, are you seeing exhaustion right now at the 132.30 levels? I wouldn't necessarily dictate this as exhaustion yet. So Steven, this is what I would say. We went to overbought condition and the oscillator rebounded at 60. That's still pretty constructive. Okay, that's still pretty constructive. If we break this trigger, or more importantly, Steven, if we have some divergence in price before we break this trigger and then we break, that's like the telltale sign of exhaustion. Now this is an hourly chart and it's going to take a while to manifest itself here. So if when you're looking for exhaustion, go to the 30-minute chart. You saw some divergence here onto these highs, so that was actually a decent short position. Go to a 5-minute chart, okay, or a 10-minute chart. Let me bring this to pound yen. There you go. And then look at the exhaustion here. So when we look at this on a near-term approach, yeah, it might be looking like a little tired here, but still looks constructive. Support at 40, support at 40. The 5-minute chart, not really showing any divergence yet. So this is kind of benign for me right now. I wouldn't say you have exhaustion just yet. But these are the things I kind of look for. I would look for one stab into the high, maybe a tag of the 50 line here, okay? And then look for some divergence either on the 5-minute chart or on the 30-minute chart to try to validate that a new high has been made in price, but a new high is not registering in momentum. And that, for me, is the telltale sign of exhaustion where I'd start to look for short triggers. Stephen, does that help? Does that make sense? You know, on its face value, again, I'm going to keep stressing where we are in the month and the quarter, okay? If it does rally into that resistance, Stephen, you know, you could get away with a short, but I personally would still be looking for a pullback to get long again. Okay, remember where we're coming off of on the daily chart. Pretty big region. And the last final ditch effort of support, we're back above the low day close for the year. We're back above this longer dated trend line support off of 2011. And I think at this point, you know, you do have the possibility for a little bit more of a substantiated rally. So I'd rather be looking for a pullback to get long for pound yen. Steven says, great, thanks. And yes, I was looking at the 5-minute, 1-minute charts. I would like to get long as well. Cheers. Right on, Steve. We're on the same page, brother. See if we can't get this thing going. I mean, honestly, ideally, this thing just collapses back into here to give us the opportunity to get long against last night's low here for a U.S. trade. But I don't necessarily think we'll get all that movement. We'll see. Seems the yen is driving pound yen rather than pound for the moment, says Eileen. So if we take a quick segue back to the pound, pound yen was number 4. Let's do pound dollar number 5. You're right. I was looking at this last night, and I was thinking about putting it on the intraday update as well, but for the same exact reason, Eileen, that you're just noting. The reason I left pound out and added dollar yen is because it is the yen that's driving. Absolutely. We're finally getting that yen weakness we've been looking for. Now, that's not to discount, possibility of sterling strength. I would like to see the pound show us a little bit more of a break here. In classic fashion, as the pound always does, there's a false break and a throw over of basic trendline resistance dating back to the highs that we made for the month. There's the throw over, failure to hold, and pull back. So I think the immediate risk is still for another pull. As long as you stay above the weekly open, I do want to maintain a constructive bias. Am I looking to take any fresh positions on pound heading into the close of the week? Probably not. Probably not. Okay, but levels remain unchanged on pound dollar. Still looking for a broader topside break of this channel formation. All right, questions on sterling or sterling yen? All right, so since we've gone over both of those, let's go ahead and jump into dollar yen. So here's what the good old yen ski looks like. Also coming into the initial topside targets now that we noted earlier in the week. What was BOJ's Governor Kuroda speaks yesterday? So Shill, I didn't even look up the highlights, to be honest with you. I can take a minute and do that, but it's funny because people will stress, oh, what did Kuroda say yesterday? Do you guys remember that we were looking higher in dollar yen ahead of Kuroda's speech? And this is a perfect example for those who are kind of doubt the technicals and doubt the market dynamics. There's no way we could have known Kuroda was going to say what he said, but we were constructive dollar yen anyway. So it just goes to show you the market is prepped to do what the market is going to do. These commentaries, these event risks, they're just triggers for what the next move is going to be. It's not necessarily dictating the direction. It's just a trigger. So Sushil, I'm always going to keep my focus on price action. That's kind of what we do here. So I don't want to try to dodge the question. I'll be looking up commentary and see if there's anything interesting that came out, but I don't want you to stress it. Okay, so some commentary from Kuroda just to bring it up to you. Here's some of the commentary that comes out highlighted on Bloomberg when you look up Kuroda's speeches. Stability in currencies is very important. Kuroda says stability is very important. You can see all these repeats are the ones that are sort of taken as highlights by the market. New regime enhances policy flexibility and sustainability. Don't think we will see big rises or falls in bond buying to take appropriate policy steps while watching FX. And these kind of comments would shake people out, especially if you were holding yen long position, i.e. dollar yen short. A stronger yen is going to be directly against what the BOJ wants. So the fact that they're watching FX, the fact that we're heading into October, I can't even tell you how many times the BOJ has made an FX intervention on Halloween. It's sort of like the joke we all have in New York about the BOJ at Halloween. But point being, we're heading into that time of year where the BOJ typically does do something. And these comments, yeah, sure, might have prompted the yen weakness, but Sushil, again, right? We were looking long dollar yen way ahead of these comments. So keep your eyes on the technicals. That said, here's what dollar yen looks like now. And here's what dollar yen looked like last night. Okay. So the initial topside objective, major key resistance that we were talking about was right here, 101.36 into 101.45. That was last week's low. Okay, it was a 618 extension, a 618 retracement, the 50% decline just from last week's move. Lots stacked up there. Okay, so that's the first target, and if we broke that, would validate more of a reversal type of trade for dollar yen. We got the break. We hit the next target at 618, 101.75 just now. But also, I just wanted to highlight that we acted and served excuse me, that area as support. So on the pullback, that was support. Defending former resistance turns support, keeps the focus higher. Now we are testing the 618, a little bit more of a critical Fibonacci level of significance. And I do want to just highlight this. If we take a sliding parallel off of that high that we made for the week, the initial opening range high, look where that parallel comes in. Basic trendline resistance off the highs. So it gives us a little bit more of a trouble spot right here as well. Okay. Near term, you want to stay constructive above the weekly open. So even if we do break this near term support, look for the weekly open to offer some support. Look for that weekly high, weekly open region. Let's say 101 into 101.10, 101.08 as an area of support. If we break down from here, initial support still is 101.36. We're looking for a stretch into the 102 handle, basically 101.95. So dollar yen is another one that, based on this major critical support, and I really can't highlight this enough, the major key level that we came into. If you guys recall the earlier update that we gave on dollar CAD on Sunday, here was the Sunday open. And we were looking, look, we're bounced off a key support barrier, looking for long entries on a pullback here as long as we stay above 101.29. That was back on Sunday. Okay, and certainly we came into this region, found a bounce. We came into this region again, set the opening range for the week, and now here's the breakout, and we're looking higher. All right. So there's your weekly open. Boom. Weekly opening range set. Boom. Again, divergence into the lows. Break. Basic trendline resistance here near term. 1, 2. See if we can't get that stretch into 102, 101.95. One other extension. It's pointless at this point, but let me just see what it looks like. Okay. Now we're going to keep the levels constant, no change. Feel free to take a snapshot, by the way, guys, if you need to, with that camera button, top right-hand corner of your screen, of any of the charts you see here. Okay, that's number 6, dollar yen. Let's move right on to Kiwi Dollar. Here's what good old Kiwi looks like. So the levels have been clear. The intraday volatility is contracting. A quarter of the daily ATR here is only 20 pips. So I've been trying to do something every time we get 20 pips up on the table. As a disclaimer, again, I'm still holding the short from last night that I noted on the report. And that was based on the basic key region of which we were trying to probe, and that's right here. 72.91 into 72.96. We probed just above it in overnight trade. I was actually pretty close getting stopped out. My stop was against the U.S. range highs here. And then we turned over. Initial target 72.58. Here's what we looked like yesterday. Okay. At this region here, 72.58, 72.59. The next level of support and where I'd want to peel off a little bit more of that trade is the monthly open, which comes in just above the weekly open. This range right here. I mean, inevitably, I'm looking for a drop down here, okay, into major key support into 72.14, 72.18, basically just below where we opened the week, or the low range of the week. But this might offer, again, a little bit of a stubborn bounce before we move off. So I'm very mindful of that. It did catch the range lows that we made yesterday. So, you could see a little bit of pivot action here, but I'm still looking lower sub 72.95, 72.96 here. So here's, I guess we could just jump into this real quick and see how it's doing. So zoom out long enough. Here's where the entry was. It actually wasn't all that good an entry. And I kind of got faked out here on this trend line break. So this is the, whoops, didn't mean to do that. This is the trigger I was using. right here. So as soon as that broke on the 1-minute chart, I did jump into the short with a stop, like I said, against those range highs from US a couple of days ago. Obviously, as soon as I jumped in, the timing wasn't really all that good. It was still a little bit early in the Asia trade session, so it did move against me originally right off the bat. And then I went to sleep with the stop at the highs and just hoped for the best. Here it is. So heading into the open today, I did see some momentum divergence heading into that low. A quarter of the daily ATR is about 20 pips, so I did start to peel off a couple of lots here on every kind of spike lower. The rebound happened. CA 60 still holding on the 1-minute chart, and 5-minute chart hasn't really made much progress above 50. So my stop is ahead of break even, a couple of pips in the money here. I'm going to leave that there just above the European highs. And if we get that next stretch low, you know, I'll look to take a little bit more off down that 72.40, 72.40, 72.50 zone here. And then at that point, I'll put my stop just above the US range highs. I'll bring it down even further and see if we can get down here. At the end of the day, if it just doubles back, guys, it doubles back and moves higher, I'll just get stopped out at break even. Not too concerned about it. It's the monthly close. I wouldn't be surprised if it does do that. So, you know, I'm not going to let this trade turn against me, but keep in mind the Kiwi dollar still looks pretty good in my mind while below 72.95. Again, objectively, we're still holding in this downside descending channel formation. So let me bring this into an hour. Let me bring it to a 2-hour, actually. It might be even clearer. We're still there. Okay? So keep that in mind on Kiwi. Any questions on Kiwi dollar? We're making good time today. Do keep in mind we do have a little bit of a flurry of data later tonight, but nothing major from New Zealand. Building permits is just something I would pay attention to just because of the housing issue that we've continued to be cited by the RBNZ. So we'll keep an eye on building permits. We had a pretty dismal read last month at negative 10%. Also, ANZ business confidence could be something if it's a major miss. You know, keep that on tap later tonight. All right. And that is Kiwi dollar. All right, so those are the major trades that I'm following for now, heading into the end of the month. And again, you know, we'll take a fresh new outlook as we open up September trade, or what is it, October trade, Jesus. And that's going to kick things off for us, obviously, as we get into non-farm payrolls, which is on tap next Friday. Comwall says, sir, I am short in silver at 1936 with a stop at 1946. Target 1866, your direction, please. Sure, let's take a quick look at silver. Silver will be number 8. All right, you took a short Conwall at 1936. Your target's 1866. So if you guys remember, we started to put this chart together yesterday. I haven't really been following crude, or silver prices. So give me a couple more minutes here. Let me see if there's anything worth note. Okay, so you marked some divergence there. You get the pop-up. It holds trendline resistance. Yeah, it's likely to be a couple of volatile days here for crude, for all commodities rather, heading to the end of the month. So this is what I would say. Look, the basic premise of the trade still remains. You're still in this consolidation that we talked about yesterday. The breakdown turning just ahead of basic trendline support. Look, I don't want you to get stopped out on account of a couple of cents here. Watch that 786 retracement. It's obviously been offering some support. We did probe below it last night, failed at channel resistance or trendline resistance again. So that's sort of initial support. I don't know if you're holding multiple lots, but that's, I would take something off there. Ahead of your target at 1866, I'd be looking at this. Basic trendline support off the lows for August, okay? And that coincides with the basic 88.6. You're looking at like 1880. Okay. I do like the fact that you're looking at 1866 as just above the monthly open, right? I love where you're coming up with these levels, Conwell. I would just play it a little bit closer to the chest just on account of where you are. And this structural support, you know, remember, we're always in the position. I hate using cliches, but we're always in the formation until we're not. So this thing could stay within here for another week, another 2 weeks before we finally clear one way or the other. Obviously, preferably, you know, you get a little bit more of a pullback here before you get long again. But I would just be mindful of that near-term support near 1880. Conwell, does that help? He says, yes, sir. All right. Cheers on that. Sushil, sterling dollar, please. Yeah, we kind of touched base on it. I'll go back to it. If you have any specific questions, Sushil, as I said earlier, I'm more favoring playing sterling yen at this point necessarily than sterling dollar. Again, if you put a gun to my head, I would say this thing probably pulls back into the weekly open and you look for some support around that region. The basic premise of the trade since the start of the week really for pound dollar has been you know, trying to maintain an upside bias well above 129.26, which is, of course, the 2016 low day close, Sushil. So as long as you stay above the LDC here, I do like the long side. Near term, again, you know, you're at channel resistance. So you need to clear this. We false broke or failed to break an overnight trade. Looks like we're making another failed attempt here, keeping the immediate risk for a move lower. But I do think, again, you kind of want to stay constructive. Well above the weekly open, bullish invalidation still 129.26. I don't have any positions on this specifically, Sushil, just a disclaimer. I'm flat on the pound. Was there a specific question that you had I can help you with on this? Sushil says thanks. Okay. Just wanted a quick review. Yeah, feel free to take a snapshot. The same levels from the report, I believe, on Wednesday, Sushil, so no change there. Hi, Mike. Aussie dollar, please. I'm holding a short. Oh, Pooja, I'm so sorry. I saw your question earlier. Yes, Aussie is going to be number 9. Here's the Oz. You know, typically my favorite pair to trade, and got sidetracked and missed that entry. You know, what can I say? It was late last night. It was right along the side of when I was in Kiwi, which is kind of the reason I didn't want to take it, but was a great entry. Okay, was a great entry. If you guys recall, all month, all week long, since the start of the week, we've been talking about Aussie dollar with a downside bias, bullish invalidation level at that trendline resistance. Here's what it looked like earlier in the week. So we had this formation we were working with, gave us nice support, but it went right through the highs yesterday, kind of plowed right through. So this is invalidated at this point. We took the August high, stretch into trendline resistance before failure. And if you note, you look at this 2-hour chart, we couldn't even get a 2-hour close above that August day close, above that August high day close before it turned around. Okay, note that also you're putting in ongoing divergence into the highs. Price action making a higher high, higher high, higher high, series of lower highs. So yes, I do like a near-term pullback in Aussie. Pooja, would I get aggressive here heading into the end of the month? It's tough. If you're already in the money, I'm not sure where you got in from, but if you're, oh, okay, here it is, 76.72. Okay, so you're pretty close from here, right? You're only about 10 pips in at this point. It does look like a decent break. I would just say this, your stop, you can't really be too much above this high. If that plows through, we're done. You you know, Aussie is testing some pretty major stuff here. And while I do like the broader upside of the trade, we've been looking for the pullback all week long. Momentum holding 60 on the daily is encouraging. Pooja says not too great an entry, I know. Yeah, I see what you're trying to do. It looks like you tried to take the break of that support level, right, as it was breaking. I hear you. Let's see what the near term looks like. Maybe there's some saving grace here. By the way, just as to throw this out there in my personal trading, a lot of times I'll jump into a position, guys, and it'll be, you know, maybe it wasn't the best decision. You know, I don't want to encourage you guys to second guess your positioning, but if I do get into position, I sit into it for a reasonable time frame. Now there's a lot of people who ask, what does that mean? It depends on the chart you're looking, the duration of the trade you're looking to hold, etc., etc. But I have no problem with taking break-even stops all day long, guys. Why? Because if I take a break-even stop and I still like the trade, I can always get in again. So I don't want to necessarily shake you out of this position, Pooja, but you know, in my humble opinion, if it plows through 76, 72 to the upside, and you still like it, great. Maybe we find a better entry in a more decent short trigger, maybe, you know, against the highs here from London or against the lows from Asia, something. That said, let's see what this looks like. So momentum on the 1 minute chart has basically gone completely benign. You're just straddling 50, so you don't have much to tell there. Momentum on the 5 minute chart does look like you're liable for a little bit of a snapback just based on the divergence that you made here on this drop. Price action, one of the reference points sub 30, one of the other ones above 30, typically is a decent trigger. And if we draw a basic trigger here as well, Pooja, you broke the trigger to the upside, which is a long bias, and now you're testing it as support. Okay, so just keep that in mind. You could get a little bit more of a rebound to the upside here in Aussie before it turns over. This is hourly. You know, you're checking 30 as support here. Here's your 30-minute. Also marking divergence. Price action making lower lows. Oscillator making lower lows. So my point is, you know, I would probably maybe put it at break even or above that swing high from Asia or London and see what happens. You know, your initial target on this one, Eileen, in my humble opinion, would be 76.40 on the downside. September high day close has been a nice pivot in price. Makes sense? And again, I like the short side. I'm with you. I'm with you. It's just that I didn't get a chance to get the entry, so you know, I don't want to get caught chasing at this point, at this time in the month. Pooja says, thanks, moving to break even. Hey, more than welcome, Pooja. And I hope it works out. Again, I think you're on the right track. I just would have liked your entry to be a little bit higher up. Hi, sorry I came in late. No problem, D. It's always good to see you. Did you guys look at Kiwi Dollar and Euro Kiwi? Not Euro Kiwi, but we did take a look at Kiwi Dollar at length. So, D, I'm just going to take a quick glance for you, but here's what New Zealand dollar looks like. As I told you yesterday, I'm still holding that short from yesterday. Looking to see if we can't get another leg lower. So most of the trades, or actually about 3/4 of it, was booked down here. Looking to see if we can possibly rally back into this trend line and then move off. But generally speaking, I'm looking for a drop, take the rest off, or chip off a couple more lots as we get down to the monthly and weekly opens. Okay, no change, staying bearish, sub 73. As far as Euro Kiwi, I think you're the one who asked about that yesterday. Let's take a quick gander. Aussie was number 9. Number 10 is Euro Kiwi. Okay, here's your weekly open. Here's my marker. Okay, let's see where we are here. This is still resistance. Yeah, you're in consolidation around the monthly open. Nothing's changed on my opinion from here, D, from yesterday. Okay, you're in this consolidation until you break out. Longer term, medium term bias for me is still heavily weighted to the upside, in my humble opinion here on Euro Key. But I think you see some more range-bound activity heading into the close of the month. If it's while we're in here, feel free to play the range. I wouldn't be targeting anything outside of this until we finally get a break, a zoom, and retest, and then I'd start playing that direction. If we look at Euro Dollar, obviously we like the short side of Kiwi, right, which actually gives us an upside bias here on its own. But if we take a quick look at a segue here into Euro Dollar, I guess that'll be number 11. We haven't covered Euro yet. Here's what the Euro looks like. And I think the Euro, I was talking about this with you guys yesterday in the webinar, could still see another drop into this region. Would be a nice entry, I think, for the long side. Bullish invalidation, still 111.56. So that would coincide maybe with a near-term pullback in Euro Aussie lower, in Euro Kiwi lower rather, excuse me, before you start to make the rally. But largely speaking, Euro Key really unchanged from yesterday. It's just you're in this range until we break out. Remember, we're still working under the premise that we're basing pretty nicely here. So the ideal scenario would try to get back a pullback into this region, actually, to try to get long against the low that you made back on the 21st. That would be the ideal scenario. But if we break this region, specifically 54.76 on a close basis, look for the zoom, retest, and then you'd be targeting the highs here, 56.45, 100-day moving average, basic 38.2 retracement. D, does that help? Does that make sense? Again, I wish I had more conviction on this for you, but these ranges, we just got to know where our best, where our best dollar is going to be best served, guys. At the end of the day, when I look at a trade like this, we have clear levels, I think, on Kiwi Dollar. I have clear levels on Euro. I might as well play them in and of themselves as opposed to trying to necessarily press this trade. I think this is something definitely to keep on the radar. If this breaks, Eileen is asking, can you explain more of this zoom retest move in general? Eileen, I think it's just the terminology that you're confused with. We've talked about it all the time in the webinar. It's about trading the turns, right? So you wait for the break of resistance, come back, check resistance as support, and then rally. That's a zoom, retest, and rally. That's all it is. Basically, zoom and retest, Eileen, take that as a break of support becoming resistance, a break of resistance becoming support. Make sense? It says, oh, okay, thanks. You got it. You got it. So D, does that help? D says, okay, yes, okay, thanks. You're more than welcome, D. Appreciate that. That is Euro Kiwi on tap, still in consolidation. All right. Any other questions before we wrap things up? It's been a great week. I want to thank everyone who's attended today. Again, we'll be back on. Remember, on Monday morning, we do our public webinar on daily FX, and then we'll be back here with the real good stuff and the juicy, meaty setups back on Tuesday, Wednesday, and Thursday up next week. Keep it light, okay? Keep it light. We're heading into the close of the month and the quarter and the week. So we'll keep things dry for now and look for fresh opportunities as we get into the new week. Guys, I want to wish everyone a great weekend. Best of luck trading into the close, and I'll see you next week.